Business Weekly, brought to you by National Social Security Fund. NSSF, we secure your future.
On this week's edition of KTN Business Weekly, we focus on the cooperative movement in Kenya, one of the best in the world. We also talk to the Chief Executive Officer of the SACCOs Society's regulatory authority, SASRA, recently set up to bring order to the sector. That's on the executive wing. Remember that you can send your questions, observations or comments to 8041 or email ktnbizweekly@standardmedia.co.ke. Good evening and welcome to this edition of KTN Business Weekly. I'm Michael Oyer. The savings and cooperative movement has existed since independence in 1963. It has grown to rank among the world's top 10 best performing movements. But cases of mismanagement and lack of regulation have threatened to derail the government's effort to encourage Kenyans to save. Tonight's main feature focuses on the savings and credit cooperative society sector and the transformation to make it more competitive.
The Savings and Cooperative or SACCO movement in Kenya is billed as the largest in Africa and among the top 10 globally. With over 250 billion shillings in assets and a saving portfolio estimated at 190 billion shillings, the SACCO movement in Kenya constitutes a significant proportion, about 31% of the country's gross domestic savings. In doing so, SACCOs have thus become a vital component of Kenya's economic and social development. From its humble beginnings at independence, the objective from the government was clear: create an enabling environment for Kenyans to save and borrow credit at an affordable rate to spur economic growth.
SACCOs are able to mobilize membership to bring them together so that they can save and, of course, participate in terms of accessing credit.
SACCOs have accumulated a lot of savings, about 31% of the gross domestic savings. SACCOs have contributed to employment. SACCOs have contributed to economic development through, entrepreneurship.
The original model of a cooperative society, and generally the savings and credit society, was that members were to save their monies, and those were the monies that were to be on-led to the same people.
Since its establishment, the SACCO movement has become the single largest mobilizer of savings in the country. As of December 31st, 2010, there were 5,544 registered SACCOs, of which 3,983 were active organizations. SACCOs have an ideal business model that has seen most Kenyans eager to open up accounts with them. From attractive credit facilities, high interest on deposits, and an ease in access to funds has made SACCOs in the country attractive to both those in the informal and formal sectors.
You are able to build up savings over time, which is non-withdrawable, except when you are leaving the SACCO. Number two is that you are able to access credit conveniently by just getting guarantors among the members of the SACCO. And the third one is that you are able to get back rebates in terms of interest and dividends at the end of the year.
I think one thing is for us to appreciate the importance of savings. We need to look at some of the countries like China and India. Those two countries have done a lot because they have built a culture of savings. I think the challenge we have in Kenya is to create an environment that is conducive to people to voluntarily save.
But the sector hasn't been without its fair share of criticism. As the SACCO movement evolved, assets continued to grow, with some organizations controlling in excess of 5 billion shillings. This led to the rise of corruption cases in the sector, with some SACCO bosses swindling funds for their personal use or making unjustifiable investments on behalf of members. This misappropriation of funds has seen a fair number of SACCOs go under, losing members' hard-earned savings whilst denting the credibility and attractiveness of the SACCO movement.
We need to be concerned about the sustainability of the SACCO model as it is right now, particularly when it comes to cost of funding. It is not sustainable that SACCOs will borrow at a higher rate than they will lend their members, because that creates a serious, mismatch in the assets and liabilities.
As a manager, you must be prudent in the way you are doing business on behalf of a SACCO. There is no way I'll come to you and you give me money wholesale at, say, for example, 15%. And then I come back to the SACCO and lend out the same money at 12%. It does not make any business sense.
Coupled with the reported cases of mismanagement was the lack of a competitive edge as to how SACCOs go about their business. The common bond philosophy that governs a society and led to the growth of the sector has seen SACCOs remain in a sort of cocoon, limiting the sector's capacity to grow. As part of the sector reforms, the government set up a semi-autonomous agency, the SACCO Societies Regulatory Authority, to govern the sector and breathe a new lease of life to the SACCO movement.
Because of the nature of the SACCO business, for a long time we have been a sector that has been very conservative. But moving forward, I think that is not going to obtain for a long time, because we are in an environment that has become fiercely competitive. We are competing with for the same customers with our counterparts in the industry, and I think we can no longer afford to be conservative.
Cooperatives in the 21st century must shed off the past and embrace the new methods of doing business.
Regulation of SACCOs is the best thing that ever happened in the history of the cooperative movement in this country, because it has ushered a situation where investors from across the globe can have confidence with the sector, can have confidence with these institutions, because they cannot put in the 100 million tomorrow and the SACCO collapse the day after.
Among the regulations ushered in for SACCOs with front office service activity are new prudential radio requirements. 10 million shillings of their total assets have to be set aside as share capital. For liquidity, 10% of the customer deposits must be set aside for operational purposes, safeguarding member deposits from the company's operations. With the regulations, SASRA is looking to a situation where SACCOs are able to compete at par with commercial banks and microfinance institutions, borrowing a leaf from the way credit unions operate in the West. It also gives SACCOs the opportunity to develop new lines of business such as investment and the ability to list at the Nairobi Securities Exchange, where they have better access to cheaper credit.
We saw regulations as availing us opportunities to expand, to attract more business from Kenyans who have opened accounts with us. We have also seen regulations as availing us opportunities to innovate and also expand into new business lines.
It is critical that SACCOs must have a sound financial base. In fact, the coming in of the regulator is timely.
But with such stringent regulations coming in, what is the future of the 3,983 SACCOs that exist in the country?
We see SACCOs consolidating, I think, in the next 3 to 5 years, because right now we have far too many SACCOs that, in my view, majority of them are not economically viable.
The provision in the regulation is clear that by 2014, for those that are taking deposit now, they should have complied. Those that will not have complied will have to accept that it is time to merge and work with other institutions as one.
With the sector now introducing some structure, the future for the SACCO movement in Kenya looks bright. Whether the member confidence has been instilled enough to ensure Kenyans will be encouraged to save, only time will tell.
Time for a break now, but when we return, Karilas Ademba, the CEO at SASRA, the Savings and Credit Cooperative Societies Regulatory Authority, is our guest on the Executive Wing. Do stay with KTN Business Weekly. Welcome back. With the exponential growth of SACCOs in the country, a framework to regulate and guide the operations has been necessary. That's why the Regulatory Authority was instituted under the Ministry of Cooperatives and Marketing Development to spearhead the reforms. Karilas Ademba is the Chief Executive of the unit and the guest on the Executive Wing.
Welcome to this week's edition of the Executive Wing. Tonight, we'll be talking to Mr. Karila Zademba, the Chief Executive Officer of the SACCO Societies Regulatory Authority, shedding some more light onto the regulations and how to govern the SACCO societies. Welcome, Bwana Ademba.
Thank you very much.
Welcome to the show. All right. Probably, Bwana Ademba, just to start us off, now the SACCO sector has been prone to a lot of risks and mismanagement in the past that going forward, it's making a lot of people shy away from actually being part and parcel of the saving society in this country. What regulations are you introducing in terms of returning this confidence in savings in Kenya?
You know, for many years, SACCOs were viewed as social entities. And for a long time, when we had the first SACCOs in the 1960s, SACCOs were assumed as social entities. But SACCOs basically are financial institutions. Now, the SACCOs in Kenya have grown tremendously from that time, to the extent that we have, as we speak now, more than 50 SACCOs, which hold assets more than 50 billion. Now, when I look at the banking sector, across the banking sector, we have banks whose total assets are even less than 5 billion. But we have a number of SACCOs whose assets are more than 10 billion. Now, it reached a point that the government thought that it was important for the sector to be looked at differently from the social perspective to a financial perspective. Now, because of that, the government decided to set up a regulatory authority. Now, the purpose of the regulatory authority was to bring back confidence into this sector. Secondly, the regulator was to ensure that at least the sector embraces the technology, which all other financial sectors are currently embracing.
What are some of the raft of regulations that you've introduced that you see making a difference towards transforming this sector?
Many SACCOs went out of their way and invested in, for example, in light tracts of land, light tracts of tall buildings all over the country are owned by SACCOs. But that's not the core business of a SACCO. The core business of a SACCO is for members to save and members to get loans as and when they want it. Now, it reached a point that SACCOs diverted from their core business now to be buildings and buying light tracts of land, and without availing loans to their members. Now, that became quite a problem. Now, what we are trying to do is, we know the SACCOs have already done that in the past. So we gave them a transitional period of 4 years, within which to bring down the level of their investment in land and building to a ratio that is required. That is about 10% of their total asset should be in land and building. But the big chunk of the SACCO fund should be available for loanable funds, because that's the core business of SACCO.
The number of prudential ratios in terms of the amount of liquidity and capital that SACCOs are supposed to maintain. Now, what are these regulations aimed at achieving in the long run?
The regulator and the law has said that the total savings of members, 15% must be retained within the SACCO or within the bank of a SACCO, or that 15% of a member saving should be accessed as and when it's required. So the ratio of 15% is meant to cater for the needs of the members, because you know the SACCOs now run like banks. Some have 20 branches, 15 branches. We want them to walk into their bank, the SACCO bank, the so-called FOSAs, apply for your loan and walk out with your loan, just like a bank. Because we want to drive the SACCOs into the mainstream financial institution.
And in terms of improving the competitiveness of SACCOs, because for a very long time, we've seen them, they're not as aggressive as normal commercial banks in terms of coming to ordinary Mwananchi and telling them, oh, these are some of the products that we have. How do you intend to increase the level of competitiveness of SACCOs and to ensure that they actually grow?
We want SACCOs to move to the next level, where they are recognized as financial institutions. That therefore means that the SACCO must invest in some minimum technology. The situation before was that I can withdraw money from any branch and my bank balance is the same. So that means the regulator has to insist on a minimum technology, which can secure the members' funds. The whole target is to secure the members' funds and also to become competitive, in the sense that most of the financial products now, they have to be developed on a technology platform. If I looked at the needs of the young people, if a SACCO is not technology driven, it cannot produce products that can attract somebody of your age or the youth. The SACCO will die a natural death as the old members retire. So as a regulator, we have to be sensitive of the fact that the SACCOs must be moved to another level.
Now that this sector is finally has some regulatory mechanisms to it, what's the future of SACCOs in this country?
What I would say is SACCOs hold 250 billion as of the statistics I had last year, December last year. The number of loans that were given, that were in the hands of the SACCO sector last year is 1.8 million. 1.8 million members had loans of SACCOs. Now these loans were about 190 billion. Now the banking sector, if I quote the statistics, the banking survey of last year, same time as ours, the banking sector had 1.9 loan accounts last year. So you can see a difference of only about 100,000. Yet the banking sector gave loans more than $1 trillion. Now what the SACCO sector need to do is to develop confidence so that members can save more money, because what the SACCO sector lacked is loanable funds. That's why you see the banking sector, the numbers are almost the same in terms of the people who had loaned, but look at where they are, because they have the funds and the confidence. So our work as a regulator is to ensure that we build that confidence so that people can save in the SACCO. And we have more loanable funds, and we can reach more people in the rural areas and the urban areas. In the SACCO sector, people no longer take loans to buy for medical, to buy food, for school fee only. People take loans and buy houses in cash, to buy cars in cash, to buy land in cash.
Thank you very much.
Thank you.
Yep. That has been Mr. Karila Sademba, the Chief Executive Officer of the SACCO Society's Regulatory Authority, shedding some more light into how effective SACCOs are in this country. Hopefully from this, you have been encouraged to continue saving towards a better future. This has been the Executive Wing.
In the money markets, the Kenya shilling lost some of the gains made against the dollar last week, albeit slight. The shilling was quoted at an average of 84.17, while to the sterling pound traded at a mean of 131.67 against the euro. The home unit exchanged at 103.33, while to the South African rand, the shilling continues to weaken in trading at 10.26. That's all we had time for this Wednesday. Let's do it again next week. Remember that you can send in your comments or questions to the email address ktnbizweekly@standardmedia.co.ke or a text to 8041. From myself and the entire team, thank you for watching. I'm Michael Oyer. Good night.
Business Weekly, brought to you by National Social Security Fund. NSSF, we secure your future.